What if I told you that by the end of 2026, you could be looking at some serious double-digit gains from one of the most rock-solid, reliable stocks on the market? Well, that's exactly the potential we're digging into today with Union Pacific, ticker UNP.
So here's the big question, right? Could a company that's been around for over 160 years actually be your portfolio's breakout star in 2026? While so many people are chasing those volatile tech stocks, this old economy giant is quietly laying the tracks for a major run. And the data? It suggests the opportunity is happening right now.
All right, let's just cut right to the chase. What are we really talking about here? We're talking about a potential total return of 15 to 25% for 2026. This isn't a guess. It's based on analyst consensus and the company's incredible performance. That's some serious upside from a blue-chip name.
And this really gets to the heart of what we're talking about today. The train is leaving the station, folks. The signals are flashing green, the engine is fired up, and all the catalysts are lining up. You do not want to get left behind on this one. Okay, Section 1, the bedrock business. Before we get all excited about 2026, we have got to understand the incredibly powerful foundation this company is built on. So let's dive into the fundamentals.
So what is Union Pacific? Well, it's not just a railroad. It's one of the biggest in North America, a true backbone of the U.S. supply chain. Think about it, over 32,000 miles of track crisscrossing 23 western states. In a world that is totally obsessed with logistics, UNP is an absolute titan.
And get this, that powerhouse just came off a year for the record books. Seriously, the results for 2025 weren't just good, they were record-shattering. It just goes to show their incredible strength and how well they execute no matter what.
I mean, just look at this number, $7.1 billion. That's their record net income for the full year, and it's up 6% from the year before, which is a huge sign of financial muscle, even when the economy's been a little shaky.
And here's how that translates directly to you, the shareholder. A record earnings per share of almost $12. That's up 8% year over year. This is the stuff that really drives a stock's value higher.
Okay, now this number, this might be the most impressive one on the whole list. 59.3%. That's their adjusted operating ratio. Now, what does that mean? In simple terms, it's a measure of pure efficiency, how much it costs them to make a dollar. A lower number is better, and trust me, 59.3% is just best in class.
Section 2, the 2026 growth engine. So you've seen how strong they were in 2025. Well, that incredible performance is basically the launch pad for what's coming next. And the company's own guidance for 2026, that's where things get really exciting for us as investors.
So here's the game plan straight from the company. They're telling us to expect continued EPS growth, even more improvements to that amazing operating ratio, and they're plowing $3.3 billion into smart spending, things like modernizing their locomotives. They're basically saying they're so productive they can just power right through inflation.
And listen, it's not just the company hyping itself up. Just look at what Wall Street is saying. The consensus from all the big firms is a resounding buy. Their average price targets are pointing to a solid 10 to 15% upside from here, and some analysts think it could go way, way higher. You can't ask for a better third-party seal of approval than that. So you might be thinking, okay, sounds great, but am I too late? Is this all priced in? Well, this chart says probably not. The stock's PE ratio, a key valuation metric, is right in line with its historical average. What that tells you is you're not buying into some overinflated hype. You're getting in at what looks like a fair price, with all that growth still ahead. Oh, and if you're an income investor, you're gonna love this. UNP pays a really nice dividend. But here's the beautiful part. They're only using 47% of their earnings to pay for it. That means there is a massive cushion of safety and tons of room for them to keep raising that dividend in the future.
All right, Section 3, an unrivaled competitive moat. So we've got a great track record and a bright future. But what makes it all stick? Why can't a competitor just come in and steal their lunch? Let's talk about the company's unique, almost untouchable advantages.
It all boils down to two things: geography and just being really, really good at what they do. Union Pacific's network is a strategic masterpiece. It just completely dominates the western U.S., which is growing super fast, and it has this irreplaceable access to all the key ports and those booming trade routes into Mexico. Other railroads are good, for sure, but UNP's map is just in a league of its own.
Now hold on. Here's the wild card.
the potential game changer that could just rewrite the entire industry playbook. There's been talk of a merger with an eastern railroad like Norfolk Southern. If that happens, you'd have the first ever coast-to-coast railroad in the U.S. The efficiencies would be off the charts. It would be huge.
And it's not just what's happening inside the company. There are these huge economic trends that are basically a massive tailwind pushing them forward. You've got companies bringing manufacturing back to North America, tons of government spending on infrastructure, and an economic rebound on the horizon. And let's not forget, for long hauls, rail is just way, way cheaper than trucking.
Okay, Section 4. The train is leaving the station. Let's pull this all together now. We've seen the solid-as-a-rock foundation, we've seen the powerful growth engine, and we've seen that incredible competitive moat. Now it's time to crystallize this into one clear, urgent takeaway. You know, this quote just nails it. Markets move fast. While others chase hype, institutional money loves the stability and real earnings of railroads. While everyone else is distracted by the latest flashy trend, the smart, big money, the institutional money, is quietly flowing into reliable, profit-making machines like Union Pacific. And when that money moves, it moves the stock price fast. And check this out. There are specific events coming up that could be the spark that lights the fuse. Any good news on that merger, a faster-than-expected economic recovery, or even just an announcement of more stock buybacks. Any one of those could be a powerful catalyst that sends the stock higher. So what does this all mean for your portfolio? In actual numbers, this table lays it all out. Your base case, where the analysts are basically right, points to that 15 to 25% total return we talked about. But what if things go really well? Stronger freight volumes, positive merger news, you could be looking at returns of 20 to 30% or even more. This isn't just wishful thinking, it's grounded in real possibilities. So, at the end of the day, it really all comes down to this simple question. You've seen the data, you've seen the record-breaking performance, the strong guidance, the thumbs up from Wall Street, and all the powerful catalysts on the horizon. The question for you is, are you bullish on UNP for 2026? It's a heck of a compelling story for one of America's most vital companies. Now, of course, we have to say this is not financial advice. It's just for informational purposes, and you absolutely should do your own deep dive. And yeah, there are risks. You've got to think about a broader economic slowdown, potential regulatory roadblocks to a merger, or a sudden spike in fuel costs. But looking at all the data we've laid out today, it really does look like the Union Pacific train for 2026 is fueled up and ready to leave the station.